Hello, ladies and gentlemen, and welcome back. Well, what a 24 hours it's been so far. We got a little sell-off in the morning of the session and then a nice ramp into the end of the day. Since then, we've had snap earnings, and of course, they weren't so good, down over 20% in the after hours. Almost every social media company has been affected, and we need to discuss what that means for the market overall. But we've got so many other important areas to go. We've got the gap fill still on the market, and never forget the big one, which is of course mean reversion. If you're not familiar, then watch today's video because we'll be going through what this level could mean in the future. So far so good, and all of the bulls are firing during earnings season. See you soon, guys. This will be a good one. Well, welcome back everybody to the daily show where we talk about stocks, commodities, and cryptos. If you like any of those markets, consider subscribing, and of course, give us a thumbs up in today's video if you find value. Let's begin with the elephant in the room. Snap stock plunging as much as 25% in the after hours. Of course, this is led by advertising slowdowns, or so part of it says. There's two real things here. Advertising slowdowns can show us the beginning of the cracks in the recession or some kind of economy woes, because of course, if advertisers slow down, it shows they don't want to spend money. Usually that's big business kind of saying, well, things aren't so healthy here, let's tighten it up. The other thing is, of course, the elephant in the room, which is TikTok. TikTok is just stealing audience away from so many social media platforms, and this will probably continue to be a thing as the TikTok algorithm is well known to be probably the best in the industry at this stage in being able to deliver, I guess, information to people very quickly in a way that they just get addicted to it. It is very addictive. I've almost lost some friends to the TikTok already. Q2 earnings so far, beat data 68%, not as high as it usually should be. 68% beats, 129 misses 60. Still upbeat here for earnings season, and I guess it's good news, especially if you've been following the channel for the last couple of months, especially the last month, as we have had a bullish tinge into this event, while many unfortunately have been a little bit bearish. Now, that doesn't mean that we don't switch bearish at some point soon, but let's talk about this recovery. Of course, here we go. 485 of the SP 500 stocks gained on the Tuesday. Now, this is a little bit outdated, but I want to bring it up. This is a huge breadth increase. In fact, it's one of those ones that makes you smell recovery. Of course, this is since December 2018. We haven't seen such a strong breadth uptake. Basically, that was a point where the market in December, if you were around, really rebounded. Check it out on the charts. It's well worth having a look at how December rebounded. That was an aggressive one. I don't think we're there, but still, having the breadth of so many stocks recovering at once is a positive sign for the markets. Now, what are some other positive signs for the bull traders right now? Well, basically, everyone thinks the market is going to fall back down, and I'm not sure when these expire, but basically, look at this. VIX call open interest on the strike over 40 is at record highs. People are betting on a capitulation crash. Now, generally when everyone thinks something, as you know, sometimes it doesn't happen, but this is an interesting one, and it really paints this current story that we've got going on. It's why we thought there would be a nice big rally here. It's why we thought the rallies would occur. And basically, yeah, VIX open interest, so many people thinking there's a big negative coming. And rightfully so. I mean, here's something that no one's even discussed. S&P annual indexed volatility since 1970, during especially midterm election years. Have a look at what happens in August, in September and October compared to the normal. Other years, okay, the VIX is maybe slightly elevated, but it's incredibly elevated in midterm election years coming into that period. August, September, October tend to be those ones. And of course, most people that know in the markets right now, September is the worst month of the year in terms of returns for the S&P 500. So maybe that's why there's so many VIX over 40 bets being placed. Another one is interesting, which is stock allocation versus consumer confidence report. Basically, this is retail traders and larger investors and what they're doing with stocks in comparison to the consumer confidence. Confidence is through the floor, but what it really tells me is I think retail traders have woken up to the concept, or we have woken up to the concept of maybe it's worthwhile holding quality positions and letting them come back rather than fearfully selling them. That's what kind of this chart's showing me. An interesting one. I think we'll bring it back because if people are going to lose and the market's going to win, usually you need to see lowish allocation if the market's going to be placing a good one, or at least in line. These are the past two crashes. We've got, of course, the tech bust. A lot of people allocated very small. We know the market was recovering around that time. And then we've got the GFC. People wiped out positions. And then, of course, we've got recovery. Now, we're getting smarter every day, and that's the whole point of channels like this. Retail traders being empowered to make better decisions. But yeah, very interesting report here coming through. Let's have a look at some other good reports. This is based on all of the last 21 kind of crashes, recessions, and what we see is the pullbacks. Now, in general, the average one, or the median, has been 12 months long with an average of negative 34%. That's very in line with what some of the other stats we've said have had, which is around 32 to 34% down if we're in a recession and if we get that number. The first quartile is 5 months and 24%. Now, funnily enough, if we think about it, return to inflation, January 22 till now, negative 24% in the S&P, 5 months. Does this mean we've got a turnaround? Well, not necessarily, but I do think that we haven't quite hit the averages of what could be in store for us later on this year. Here's maybe an early indicator, or at least an indicator of that probably going to happen, and that is, of course, number of inverted yield curves. This is all the yield curves. So a lot of people don't know what that means. Basically, it means the short date yield curve, let's say the 2-year yield, is higher than the 10-year yield, and all of the other ones are higher. All the other short ones are higher than the long ones. Effectively, if that gets over 50%, over the last 50 years, it has been a 100% indicator of recession coming in the US, and it has worked so far. So we will, of course, be watching that. Now, a lot of people are arguing this chart. It's a huge reason why this bull movement is currently happening and why so many people are feeling confident, and that is that basically the Nasdaq usually bottoms first. Now, we've been big bulls on the Nasdaq over the last month in terms of general flow. We've seen the money flow into Nasdaq, and that actually holding better as a base in comparison to the S&P 500 as the market rotates through all of the sectors back into growth. And that's because growth recovers first. So both in the dot-com bust and the GFC, growth recovered before the S&P 500 hit its lows. So there is even a capability that the Nasdaq may drop later on this year, not make a new low. This is possible, and the S&P 500 could still come down. That's pretty surprising to many, but certainly very possible. Let's take a look here at the earnings moving forward. As we mentioned, we had the Snap earnings, pretty disastrous. Got Twitter. Let's see what happens with that one. That's before the open on Friday. So probably a little bit of volatility. We've also got American Express and some other large companies coming out. So speaking of earnings, let's talk about the sponsor of today's video, which is Tiger Brokers, and how you can use the platform to help you during this earnings season. One of my favorite features is being able to get news really quickly. And on top of that, we want to also know what news is coming out during earnings season. So we've got the platform here, and we can see that Snap after hours down 26.36%. There's so much information on the right-hand side here that we can gather, including level 1 and level 2 data. But if we scroll down, we can also see capital flows, and capital flows actually were mostly negative for the day. The little pie chart down here shows there was a slight negative tinge on the capital flows in terms of large and smaller traders. And when we scroll across to the news tab over here, you'll notice all of the news and reports coming out about Snap. So you can get it really quickly. And one thing I hate about when you're really investing or you're making trade decisions is having to go to lots of different locations. There's so much information here and analysis and everything. You don't have to go everywhere else. Another thing you're going to need for earnings season is, of course, a good economic calendar. Well, Tiger Brokers does have one of those. Of course, you can select report announcements for the country that you're trading, in this case, the US, and you'll be able to see all of the announcements coming out in terms of the weekly view, and you can go through and look at all the stocks. You can also add, I believe, your watch list, select that, and then just have it tailored to your needs, which is excellent. So if you're interested in Tiger Brokers and you're interested in opening an account, click on the link in the description down below or the pinned message. There's a whole bunch of special offers for different countries out there, and of course, a big thank you to them. So let's talk about these rallies so far in the markets. Are they showing signs of slowing? The short answer right now is no. We haven't actually seen weakness really, except for the after hours with Snap, from these markets. As we mentioned, small downtick at the beginning of the session, nice rally through the day. There was actually a 2.4% switch here at one point if you got the Nasdaq perfectly. That's a great trading day if you did it. S&P 500 is my favorite at the moment just because I love the technical analysis on it, and we'll look at that very, very soon. But yeah, nice session, not too bad. Let's have a look at what was doing best. XLY, so of course consumer discretionary, led by Tesla there. And then we had semiconductors doing well, and an old favorite coming back through, gold, back off its demand level. It showed the signs that there is someone sniffing at the gates for gold. We'll take a look at that on the charts. Maybe it's not yet, but certainly a nice rally there for gold. The rest of the sectors were mostly up. Of course, energy struggling as we suspected in the previous video. Let's jump into the charts. What's happening here? Well, the VIX, the volatility index, dropping through the 24. Last two times this happened, we actually saw it go back down to the 20 level. And that was where the troubles began for the stock market. So remember, it was bull, 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 and then suddenly bust. Now, we do know there's lots of VIX 40s. The market doesn't have to get to VIX 40 though. But what we might be seeing first is maybe a VIX 20. What do you guys think in the comments down below? Let me know. Do you think the VIX is going to 20 before it's going to 40, or the opposite way? Let me know very soon. Hopefully we can get a bit of a poll going on that. Speaking of polls, I have polled the community. Make sure always to vote in that one. It's a great resource for us to see what everyone's thinking. It's coming in more bullish than usual. I think it was about 44% people bulls. That's up from 30% a week ago. So it's starting to shift. People are believing in the bull run now. Obviously, we need to be a little bit careful both ways here. So we'll look at that one over the weekend when we produce the video. US 2-year dropped. That is quite good for things like the stock market. We know they're correlated. Continue to watch it. It's not one day that matters, but certainly if the US 2-year keeps going down and the market keeps going up, that's actually not a bad thing at all. The one that we prefer to watch though is the US dollar. So the US dollar came off the excess phase up here. We obviously made the decision it was negative at this point, which helped with the bull rally so far in the S&P 500. And we're at a point of such big importance. Notice the triple wick low currently on the daily. This is a 20 moving average, mean reversion basically. It's bounced off it before and we're at it again now. This is critical because if the US dollar does bounce off this level and keep going up, well, guess what? Maybe it is going to be a little bit of selling coming in on the Friday and possibly even into the next week. If money's flowing into the US dollar, it's probably flowing out of capital markets at the moment. That seems to be the general gist. And let's have a look at a 1 hour chart here, just so we can get an idea of how important all of this is. So basically, we don't want the US dollar above this 107. We'll get you the zone, 107.60. If it does get above that, it kind of starts to change the trend towards the upside, and then pullbacks may be met by buy demand. What we're looking for, if you want the markets to go up right now, is the US dollar to fall through this level. And when it falls through this level, especially coming off the current distribution that it would be in, it may continue to fall. And if it does, we may have a weekly 20 on our hands very soon with the US dollar. If that occurred, of course, what's going to happen? Mega rally. Now, do remember, mega rallies can occur in bear markets. In fact, some of the stats have that during bear markets, you see some of those most aggressive rallies. 7% in one day is not unheard of, even 8%. So just remember, this is possible. Anything is possible in 2022. But at this stage, we've got a great level there on dollar index to be focused in on. So gold hit our demand level. We've had this one here and the other one for a little while. It hit it and it bounced in a big way. Let's actually go and analyze this from the 1 hour chart and take a look at it. So here we have kind of our level of resistance or supply. Effectively, there's probably some orders floating behind this. You can see it bounce straight into that. A few people in our Discord community, join the Discord community, links in the description as well. If you're interested, over 10,000 people in there, plus we have a private community. But a few people got this one down the bottom. Congrats if you were looking at the level. Maybe I wasn't prepared just yet, but I'm certainly starting to look for the change. So what I mean by that is we're looking for the change of trend. We want to see it breach through here, come back, maybe test these 1700 lows, and then look towards the buy side. I'd like to see structure here for about a week with gold, but I will tell you this, gold has usually good movements during August. So I'll continue to keep you updated. This is a great first sign. Of course, it doesn't mean all jump into gold. How great is this? That's not what it is, but at this stage it's starting to form the beginnings of structure. We need it through 1723 first, and then possible pullbacks to 1700 may be met by a nice demand. Move over to oil. This is still weakening. Demand is bad, or at least demand destruction is bad. The downward trend, the series of lower highs. So it's important to note these are all lower highs as it's bouncing up. And we're testing at this stage a serious level of support. So if we breach through here, watch out down below for oil. I can tell you the December barrels are trading around, I think, $86 a barrel at the moment. It's two different opinions. Basically, some people are thinking down to like the 60s again for oil. And then some people have got like $300 a barrel for oil still, and at least $150 a barrel. I don't know if it's going to the upside. It doesn't seem probable at this stage, considering what's going on with the economy, the interest rates going up, and continued decline here. But yeah, watch out if you're trying to buy this level. It's going to be very careful. I would prefer to look at the technicals above that 105.20 from a technical level, because that would really show a base formation, a max pain, and then of course a further rally past that point you can get hold of. So be careful here on the oil trades. What did well in the last session was all about Tesla, guys. Tesla did really well. It moved up to 815. Of course, it had a monstrous ramp. There still may be some sell-off on the Friday, but at this stage, you'd think buyers will come in for Tesla, and maybe we finally see that gap fill between around 860, so the one that was left in the previous sell-off. Good move here from Tesla. It broke out of our little symmetrical triangle, and it looks like there's a little bit of ramp here. Obviously strong out of the gates, left a gap behind, but looking okay. Apple hits the bottom of our trend line. We've been watching Apple into the earnings, so there's the trend line that comes through from multiple years ago. Really nice one, and we've hit that. Again, could it show signs of maybe some weakness on Friday? Possibly, but realistically, it's just right around that level ahead of the big earnings on the big tech moving forward into next week. Apple's showing really good signs of strength, and remember, it did break through this level. So once we get through 156, if that does happen, guess what? We might go all the way to 164. If we hit 164 before earnings, though, for Apple, I'm going to be a little bit scared, because that'll mean a monstrous ramp, and it could be buy the rumor and sell the fact on especially a stock like that. XLY, XLP, nice base, good movement. This shows us that we're still looking towards that growth being outperforming of staples, though we are at a resistance here. So again, maybe it's a switch on Friday. Overall, though, it's been really great to see so many people so happy with the fact that the Nasdaq and their growth stocks are recovering. I think it's excellent to see that people have been taking advantage of the money flow that Wall Street has been placing recently. Speaking of flow, we won't mention this too much, but of course the China stocks are still continuing to accumulate. There's real potential in these long term, but obviously a lot of risk, which many people don't want to take. Look where they came from, 108 all the way down to 47 as the QQQ. So basically it's the Chinese technology ETF. That's a big drop off there. Dow looks really good. Dow, nice bounce. Dropped underneath this little level here, and then nice little bounce into the close of the day. New high, again, shows that it might want to go and do the fill. The fill level is at 32,268. That's to get rid of the gap. And I believe there's another gap up in here. And we've theorized that this could be all a double bottom pattern that moves into that kind of 33.2. And then we find out whether the bull trap is going to be set. IWM, nice day. Again, another new high, strong, broken through, looks pretty good. Go over to the Nasdaq. Again, really good day. Nothing much to complain about. It's getting close to the resistance. We're certainly not at the trend line that really separates this from being a bull trap to a real rally. And that would happen probably around this trend line. But, you could really see this still ramping easily into just underneath 13,000. Possibly even on the Friday. You never know. The markets are crazy at the moment in this aspect, and they're moving up. Buyers that want to miss out or any other reason, they might be looking at around this level here, which is about 12,200. But the market continues to ramp. And I think we need to look at the S&P 500 to look at that. First things first, 20 moving average. That is now sitting at 4,121 on the S&P. This is the mean reversion level. This is what we used for so long during 2020 into 21. And of course, this year, 2022, it's been a big sell zone for the markets. So will it be again? It certainly wants to touch it. It looks like at this stage and move in towards it. Do remember there's a gap that's also potentially going to fill on Friday. 40.20 basically, or 40.17. There's a little gap that, well, big gap actually, that could be filled, and that didn't quite get it done on the Thursday session. Main reason, I think, Snap. Snap stopped it, and of course, in the time of this recording, I think the S&P is down about 0.12%. Still, pullbacks could be had before it goes up. Let's have a look at the smaller time frames to get a bit of an idea of what's going on. First up, I would say that was actually not a bad buy if you were watching the big wick purchase. It snapped through, get what I'm saying there? Then it bounced back, and at this point, we're moving to test the role reversal. And realistically, 39.70, this is a pretty big level. It's the previous highs. The market might come down into that before the open. And then what do we see? Do we see some form of turnaround story? That's probably what I'd be looking for in the next session. If you're feeling bearish, you really need to take out what probably is a defended zone now, which is between the 39.20 and 39.30 on the S&P. If you close underneath that level, then of course, any pullbacks will probably be met by sell demand. So bears, they're looking towards this. Bulls, they're looking towards potentially that level for Friday. And hopefully, there's some form of turnaround on the charts in terms of what we're seeing. S&P 500 moving into options expiration Friday. Max pain has increased again, 390 now. So it really shows you that there are still a lot of bears. People are placing bear positions all over the markets, and it's still happening. There's so many bears trying to get in early before what they believe. But remember, when everybody isn't convinced that the market's going long, it's going to be very difficult for it to short, especially with so many puts in the system. 390, we'll find out whether it can hit max pain this week, but an interesting one to see it come up. Bitcoin, nice little rally here in the last couple of hours. If we scroll down, we can see on the 1 hour that it's starting to look a little bit better. Not sure if I would trust it, but we've basically switched a little bit here. Maybe we're going to see some buy demand coming through on the box. At this stage, you can really only hope with Bitcoin. It's a tough one to handle. It got smashed by Elon, and then of course, now it's struggling around. Ethereum still seems like the better and stronger play. You can see it's almost back to the highs again. And for some reason, Ethereum's finding the bulls at this stage. What happened on the news? Basically, we had, of course, ECB. We had the Euro main refinancing rate increase, 0.5%. To put this in perspective, I just want to show everybody this chart. Check this out. This is where they are now and where they've been for so many years. So you can see since the GFC what happened with the Eurozone. It was really sick. News ahead for Friday is going to be Flash Services PMI, 9:45 a.m. New York time, so definitely watch that out. So if you haven't already, consider subscribing to the channel. Give us a like if you enjoy it. We will be out with a weekend video and of course be covering the big earnings next week. Definitely check that video out because it's going to be a massive one. Amazon, Microsoft, Google, Apple, it just doesn't get bigger than this. It is earnings super week next week. And of course, if you're interested in checking out more of the special offers and things that Tiger Brokers offers traders and investors out there, then click on the links in the description down below. Thanks so much, guys. We'll see you in the next one. Bye for now.